Greetings and welcome to ROIClear. My name is Ray Hightower, and today we are fortunate to have as our guest Ms. Chutima Barrios. Chutima Barrios is managing partner of Rent Roll Capital. She also has a role in corporate America where she does financial planning and analysis. She's got a rich financial background. She's a real estate investor, an entrepreneur based in Pennsylvania. We had a chance to get together for coffee a few weeks ago here in Arizona when she was visiting Arizona for work purposes. And now we're doing an ROIClear interview with her. So please join me in welcoming Chutima Barrios. Welcome, Chutima.
Thank you very much, Ray. It's my honor to be here.
We are honored to have you here as well. We're very grateful to have you here as well. And to start us off, I mean, you have a lot of things in your background, a lot of things in your history. To start us off, why don't you give us an elevator pitch? And for those who are new to ROIClear, Chutima is on an elevator with someone she wants to influence. Chutima, what would you say to that person in the course of an elevator ride?
Yeah, so I love investments. I started my career as an analyst for a private equity funds. I love growing wealth, right? And now I'm helping other retail investors to grow their wealth through real estate investments. So at Rent Roll Capital, we offer private offerings for retail investors or family offices to invest in multifamily assets with us so that they can grow their generational wealth.
Excellent. So you're reaching out to people who have a desire to grow wealth, and I'd imagine to generate cash flow too. I guess it depends on the investment as to whether or not it cash flows. So that's your target market right there. How do you find most of your potential investors? How do you end up connecting with them initially?
Yeah, so I right now I'm hosting meetups in local market in Philadelphia.
Hmm.
If anyone interested, you can look up at meetup.com and find multifamily masters in
Hmm.
Philadelphia. If you're based in Philly, we do
Yes.
in-person meetup and we do online meetup as well. And also at our website, rentrollcapital.com, you can visit our website and then click join investor portal. That's where you're going to get newsletter right to your mailbox. And you can learn
Excellent.
about multifamily investments with us.
Yes. Okay. So you're doing education as well. You're teaching people who want to understand this field as well.
Yeah, because this is very it's simple but not simple
Hmm.
investments type of asset, right? Simple as in
Yes.
it's multifamily. People need a house to live in.
Hmm.
You get income from rental, right? And then you have all the operational plans, how to control expenses, and then decide when to sell the property to other investors. That's how
Yes.
we provide return to our investors, right?
Hmm.
Yeah, so there are things that new investors would love to learn more, the terms about the investments, IRR, cap rate, stuff like that. Yeah.
Right. Now, you're an investor, you're a financial planner and analyst. Clearly, you're a business leader, and you're also an educator. As an educator, when people come to you to learn about investing in multifamily real estate or to learn about syndications, what do you find is their biggest misconception, or what is one thing that everyone needs to learn that maybe they get wrong initially, but you're able to get them on the right path?
Yeah, so some investors, they are afraid of investments. They heard news, right, headlines, and they're like,
Yes.
no, this is going to go bad. I don't want to, you know, lose my money, right? But
Yes. Yes.
that's what we saw in the headlines, and it's the fear, right, that
Yes.
us
Yes.
human have. So
Right.
I
Right.
will
Right.
provide education of like, well, this is how we look at the investments. We look at
Hmm.
the properties, and it's market specific, property specific. We look at
Yes.
the cash flow. You have a chance to review the financials projection with us, right?
Hmm.
Not just like in stock market. People lose money in stock market because they
Yes.
um, just look at the market momentum maybe, and they think the price will go up without doing due diligence. But for us, multifamily investments, we do thorough due diligence. We walk the property. We
Yeah.
ask current tenants, are you happy with this this apartment. Do you happy living here? Is it safe for you? Like, what make
Mhm.
you live here, right? So we
Yes,
do
yes, yes.
diligence and we share that with our investors.
Okay. So you make a good point. In the stock market, when there's positive momentum, everyone looks like a genius.
Yeah.
Everyone does. Okay. Now, what initially got you interested in investing? And you have an interesting story where you started off, you were born and raised in Thailand. And
Yes.
what was it that drove you to come to the States? Did you develop your interest in investing when you were a child, or was it when you became an adult? Or tell us a little bit about that journey, please.
Yeah. So when I was in college, I was reading this book, Rich Dad Poor Dad.
Ah,
Um,
yes.
Pretty sure many of us have read that book. And
Yes.
so that's when I was like, oh, yeah, I have to do investments. I can't just
Hmm.
work, right? And meaning we need multiple sources of income. And
Yes.
then that's why when I started my career, I look into the investment space. So I work with a private equity fund to learn how professionals, global firm invest, make the decisions on their
Hmm.
investments, right? So I worked there for 5 years, and then I want to transition into corporate world. So I came to the U.S. for my MBA degree,
Hmm. Yes.
and I went to University of Pennsylvania. So did the 2 year program, graduated, and then worked with a corporate that grow through acquisitions.
Yes.
Yes, that's my so kind of like everything I did is within investments, growth, um, doing investment return analysis. And
Yes.
then, yeah, so and I started investing in stock market because it's accessible.
Yes. Yep.
Just open up the brokerage account and then you can trade,
Hmm.
right?
Boom. Yep.
Invest. And
Hmm.
then, but real estate is harder. You need to find a property. You need to work with a lender, right? Because you
Hmm.
cannot, mostly, if you are not born rich, then you need to
Right.
borrow, right,
Yes,
to
you do.
invest. And then you have to manage the property
Hmm.
as well, manage the tenant, um, and making sure whether you increase rent or you control expenses,
Sure.
because that's
Now, what
where
was?
you,
Oh, yeah, yeah, yes. Increase rent, and control expenses, and bump up the NOI.
yeah.
Can you tell us perhaps about your first investment?
My very first real estate investment,
Yes, first
or
real estate investment. Yes.
real estate investment. The first one is really with my husband.
Hmm.
So he had a primary home, right? And we can do cash out refinance
Yes.
so that we can put towards down payment of the next
Hmm.
property.
Yes.
Yeah. But we didn't do the down. So what we did is called BRRRR strategy. So we
Yes.
bought distressed asset. It was a
Hmm.
shell.
Hmm.
And then we converted into multi-units. So 4 units, we call it quadplex.
Yes.
Yeah, so we fully renovated the shell into a quadplex, and then we
Hmm.
rent it. After you rent
Yep.
it, you refinance with a bank, you cash
Yes.
out, and then you buy the next property. That's what we do.
Hmm. Buy, rehab, rent, refi, repeat, the burst strategy.
Yes. Yes.
Well known, well known. The first one is always a special one for us. We get excited about those, don't we?
Yes. Yes. Yes.
We
Very much.
do. What would you say is so far your favorite deal that you've done so far in real estate investment?
Yeah. So actually, I think my favorite one is, and as a beginner, I would
Hmm.
say it was my house hacking.
Oh
We
yes,
did.
yeah.
We also that's come later, but we did. We bought a 4 units, again 4 units building, right,
Hmm.
and then
Hmm.
again rehab it, and we live in 1 unit and we rent out
Yes,
the three.
yes.
So we are able to actually also put down payment only 3% of the purchase
Hmm.
price,
Yes.
equivalent to like, and so it's very low cash out of pocket
Hmm.
comparing to the appraised value, the after repair value.
Yes, yes,
Yeah,
yes.
so the after repair value was 750,000 of that
Hmm.
building, and
Yes.
we put down payment, closing costs, everything in the beginning was only 30,000.
Whoa. What was the
Yeah, so
acquisition price? I know the ARV was 750. What was the acquisition price?
325.
Wow. You doubled it. You doubled the value through forced depreciation by improving the property. You doubled the
Yes.
value of the property.
Yes. Yes. And the tenants pay mortgage for us. So our
Yes.
primary home, you don't have to pay mortgage. People usually pay the mortgage, right, for their
Yeah.
primary home, but we don't
Right,
have to.
right, right. Right. Now,
Yeah.
what would you say is your buy box now? What kind of properties are you looking for now? What is your ideal deal?
Yeah. So right now we're looking at multifamily, larger size, so 75 units up, and we
Yes.
look into North Carolina, South Carolina markets. So
Yes.
it's in southeastern, within like 2-3 hours flight from where we are at, so that we
Yes.
can do due diligence and we can do commute 1 day trip, right?
Yes.
Um,
Yes.
for our asset management strategy.
Mm-hmm. Mm-hmm.
Yeah, so that's pretty much our buy box. Yeah, and then we do class B, um, meanings in class B neighborhood, class B type of assets.
Yes. Okay. So North of South Carolina, Class B asset, 75 units or more. Reason for North and South Carolina is because you live in Philadelphia, Pennsylvania. You want to be able to do a day trip there and back during due diligence, or if some issue jumps off where you have to be there. So yeah,
Yeah,
got
and
it.
not only just flight time, but also those two markets, and also Georgia as well, Atlanta, Georgia.
Yeah.
They're growing. They
Yes.
have
Yes.
positive net migration every year. So
Right.
younger population move to those
Mhm.
markets because of job growth,
Right.
warmer weather. They don't have to deal with snow.
Mm-hmm. Mm-hmm.
So it's go in line with the multifamily investments theme.
Yes, there it is. There it is. So yeah, certainly those markets, North and South Carolina and Georgia. I mean, there are others, but it's
Yeah.
helpful to focus on a few. And you're looking
Mhm.
at job growth. In our business, we look at job growth, income growth, population growth, and it sounds like you're looking at growth as well when you're making your decisions
Yes.
about where to acquire.
Right.
Now, many of our listeners know that for multifamily investment, there are pretty much three pillars that you might pursue if you're a syndicator, or three areas of focus that would be acquisitions, asset management, and capital raising. Where would you say that you spend most of your time, or do you balance between the three, or just between two? Where do you find that you spend most of your time of those pillars?
Yeah. So right now I'm doing um, capital raising and also underwriting or deal sourcing.
Yes.
Because yeah, underwriting is my strength. I
Yes.
like
Yes.
working on Excel spreadsheet. Um,
Yes. Yes.
yeah, and I love like looking at research. So it's not just taking whatever available in the offering memorandum from the brokers and put in Excel, but also
Yeah.
validating those data. Because
Right.
just like I look at a deal just a few days ago, the broker said this property in this neighborhood, the market research said expected rent growth in the second half of 2023 would grow
Yeah.
14%. It's
What?
unheard of, right? Yeah. How can rent be projected? And this market research is from CoStar. So CoStar is the reputable, reliable source of market research, right?
Yes. Yeah. 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 Yeah.
So you gotta look into what CoStar really say. So in the OM, they
Hmm.
cut one sentence, put it in there, but what CoStar really mean is there are new inventory coming in, new construction
Yes.
coming in.
Yes.
That's
Right.
why that neighborhood overall rent is projected to grow faster. That's
Ah, I
because of new
gotcha.
construction. So you can't just say, "Oh, yeah, the OM said 14% up," and then you put it in your underwriting model,
Yes. Yeah.
right?
Yeah. Yeah. Yes. Yes.
So,
Understand why they did it, and just because it's in the OM doesn't mean it's true. You got to verify. I love
validate.
that you're going in there, trust by verify.
Yeah.
And the idea of 14% rent growth in the half of the year, that would be a ridiculous number if you were talking about a full year too.
Yeah.
We've seen it happen. You and I have both seen 20% plus rent growth in certain markets, certainly in Phoenix and probably Nashville, probably in Atlanta at times, or in Austin, Texas. But just because we've seen it one year, that doesn't mean it's going to happen
Mhm.
again.
Correct. Yeah. Yeah.
Yeah. Okay. All right. So you love underwriting, which means you love acquisitions. You focus on the acquisitions. Then you're doing capital raising, as you said. What advice would you give to our listeners and viewers who want to do capital raising as well? Because you're doing it now, you're in the middle of it. What advice would you give on capital raising?
Yeah. So I think number one, you have to go out, tell all everyone in your network
Yes.
that you are doing real estate investments. You're looking
Hmm.
for investors. You're looking for partners. If they want to, learn about investments with you, invest with you. That's
Yes.
number
Yes.
one rule. You gotta let everybody know, right?
Yes. Yes.
Um, yeah. Number two, you want to be, I think, and to be capital raiser, you also want to know what you are raising for. You want to
Mm.
know the
Mhm.
deal. You want to know what multifamily or asset class that you're raising. What's your focus on, right? So some people
Right.
raise for storage, right? And you need to know how that asset class work. What kind of
Hmm.
income? How do you increase the income? Income control expenses, basically increasing NOI.
Yep.
How do
Yep.
you justify the cap rate? Because that how you justify your purchase price.
Yep.
Cap rate going in, exit cap rate. How do you
Hmm.
make sure that you protect investors' capital?
Right, right. Preservation of capital, right?
Yes, yes,
I know one of the things we look at that we want to deliver to our investors is certainly preservation of capital, tax advantages, and return on investment
yes,
across the
exactly.
board. Across the
Yeah.
board. Do you have investors? I mean, I like that you focus on preservation of capital because that's fundamental. What was Warren Buffett's rule? First rule, don't lose capital, and second rule, remember rule number one, right? That's his
Yes.
that's his thing. And so, as a matter of fact, you may have heard him speak at. He's been to Pennsylvania. Was he ever there when you were doing your MBA?
No, I actually went to his annual meeting,
Oh yes,
his
yes, yeah.
shareholder meeting.
In Omaha, yeah, those are
Yes.
fun meetings.
Yeah.
Oh my goodness, we may have run into the in amongst the 20,000 other people that are there. So yeah,
Yeah.
those are fun meetings. A lot to learn there. Excellent,
Yeah.
excellent. Now, as an underwriter, you mentioned underwriting with respect to acquisitions, and mentioned it with respect to capital raising. Can you tell us a little bit about asset management? Do you use your underwriting skills with asset management too? And if so, how do those two fit together for you?
Yeah. So asset management, you want to make sure. So when you underwrite the investments, right? You put in operational plan. You reflect operational plan into it. You have
Yeah,
to
yes,
understand whether you really can increase rent. If you can, how so? Do you just
yeah,
force it or you renovate the units so that you can
yes,
increase rents and match the market rate,
right,
right?
right,
So if you do that, you want to make sure how many units can you renovate at a time within,
yes,
say, 4 to 6 months time frame, right?
mm-hmm,
Are you
yep.
underwriting that you're going to finish 20 units in 6 months, right? To going
Depends on
aggressive.
the size of your team and the level of
Yeah,
rehab, but yeah, of course, that 20 would be a lot doing. Yes,
yeah,
yeah.
right. So you gotta be asking your contractor at the same
Hmm.
time. What's your capability in renovating? What's your turnaround for one unit, right?
Yes,
And then
yeah,
reflect that in your underwriting model. After
right.
that, after we close the deal, you gotta go back and review. This is the plan. This is the business plan, and how
Hmm.
you execute it. So that's the asset management, like making sure if you plan to renovate your new units, making sure you can do it as you planned.
Yes, yes, yeah. And certainly because you have done the underwriting and you've put together the business plan, you're very detail oriented because you have all of those skills. You know exactly how to guide the contractor or
Yeah,
contractors, perhaps through the GC, to get the business plan executed. So that's powerful.
yeah,
All
yeah.
right. We are coming towards the end of our time together. It's gone very, very quickly, and I'm grateful for the opportunity for the exchange of information. Certainly, I've learned a lot, and I'm pretty sure our listeners and viewers have learned a lot as well. As we wrap up, what can you tell us about what you're reading? Or rather, I should ask the question a different way. What are you reading right now that you would like to share with our audience?
What am I reading right now? Well, actually, so I read news every day,
Yes, yes,
CNBC. That's how we
yes,
keep up with the macroeconomic trend, right?
yes, yes, yes.
Um, yeah, you go, and everybody should read news
Oh,
too.
yes, yes. Got to do
Right?
that. Got to.
Yeah. And then in terms of book, so I'm reading Who Not How
Yes,
book.
yes, yes.
This one to help us as entrepreneur to
Hmm.
understand that delegation will help you achieve your goal faster
Hmm.
and more efficiently. Because
Right.
we were trained or taught or we were raised by, a concept like you got to be able to do things,
Yes,
right?
yes.
Yeah. When you go to school, the teacher said, "Oh, your weakness is this, therefore improve it."
Right, 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 right.
um yeah, but in entrepreneur world, you want to like know who is better in
Yes.
certain area than you, and
Hmm.
you ask that person to help you achieve that area, and then
Sure.
you can focus on activities that you are mastering at, you're great
Hmm.
at. Yeah.
Right, right,
So that's
right.
the book that I'm reading right now.
I love the summary. Yeah, who not how. This whole idea of trying to shore up our weaknesses the way we were taught in school. No, focus on our strengths and bring in others to fill in our weaknesses. I love the way you summarize that. That's, spot on. And it's easy to say, but hard to do, isn't it?
Yeah, yeah, yeah. But sometimes, like, as an entrepreneur, you're like, oh, I want to do this. It's probably take me
Yes.
10 minutes, but it turned out to be 10 hours.
Right. That's exactly. And there's so many rich examples in that book of that. So that's wonderful. Chutima, how can people get in touch with you if they want to invest with you or partner with you or learn from you? What's the best way for people to reach you?
Yeah, so my email, Chutima, Chutima, at renrollcapital.com. Or
Yes.
you can go to my website as well, www.renrollcapital.com, and click join investor club. Yeah.
Excellent. Excellent. Chutima Barrios, thank you so much for joining us here at ROI Clear. It has been a pleasure speaking with you today.
Thank you very much, Ray. My pleasure as well.